What's up, everyone? How's it going? Welcome to today's trade recap and market analysis segment and episode. Today is January the 8th, and it's a Thursday. And today we took a total of two trades. I think we took one here as well, but it got cooked, so we took three trades for the day. Um, I mean, break even, profited, loss. And that's how it went. Again, this week we're essentially not trading with our capital. We're just getting back into the groove of things, taking it slowly, and then next week we'll look back to get on these funded and evals. Yeah, but I mean we're just seeing how the current market conditions are, and I'm not gonna lie, they aren't the greatest, but we did happen to make it out alive here today. If I remember where I marked out the last trade, I believe it's like I remember something like this. Right, yeah. This was a trade I would have taken. Or this was a trade I took, but again, we're keeping things as transparent as we can, right? And what is that? Zero, okay. 19, 19, that's 20, that's 15 ticks. We'll be up 15 ticks today, which isn't anything crazy. Would have loved to be up 20 plus, but we're not gonna be mad at 15 ticks as well. We hopped on the markets pretty late today, around late 9 a.m., simply because we felt a bit sick today, a lot of mucus in our throat, but there's that. So essentially what I'm going to do today is analyze essentially the start of the market, see if there's any trades we missed, and then go over the trades that we've taken. And one thing that made today quite interesting was actually that deviation or divergence between ES and NQ. Because take a look at how ES looks right now. And hold on, I'll pull up NQ for you guys. Take a look at how ES looks right now, especially from this market open time, right? We had these highs here, we went below, we had very strong buying that pushed above these highs, and then we're holding around that region. Now, if you take a look on NQ, well, we do see a sell-off until 9, but take a look at how different the buying was, right? First of all, the selling pressure on ES was nowhere near as crazy as it was on NQ. Additionally, the buying pressure on ES was much greater than it was on NQ. Thus, we have this sort of deviation. Which one should we follow? Should we follow that the shorts are going to come in, or if the longs are going to come in? And honestly, that's where the tricky part came in, because if you take a look at ES later in the day, right? Here, we made this crazy wick off of ES's VWAP, start to push up, and I mean, hold on, what time was that? That was right around 9:30. So where's that wick? Where's that wick? Right here, right? We saw big sellers enter in near those lows, and we saw big buyers come up, bring price upwards. So potential absorption there. Price went up. But then if you look up here, buyers got absorbed, and then now these sells came in very strong. And we see this block of seller absorption that potentially we should have used to our advantage before entering into this long trade. But I mean, there's that. But if you look at the same time where it looked pretty bullish on ES simply because of this VWAP rejection with this strong wick and seller absorption at that specific moment, if you take a look at NQ, we were actually rejecting off of VWAP, and we're looking pretty bearish on NQ. Because on NQ it looked like a downwards retracement, while on ES it looked like an upwards retracement, again showing divergence. So that's where the majority of the difficulty came in. But when in doubt, we're gonna focus on the instrument that we have the most order flow with, and thus we can analyze this. And already I see how we could have avoided this trade, right? Or simply waited it out. Why? Well, simply look at this big block of buyer absorption that we're seeing above. Essentially, we should at least be able to mark out a buyer absorption block like such, perhaps even like there to account for volume and keep it like if price is able to break out of this and retest it, then price may want to head higher. But if we struggle at that region, then price may want to head lower. Now, we've pushed down low, providing a decent value entry, providing some bullish sentiment right there. But at the point of entry, is there asymmetric risk or asymmetric spread in order flow that would allow us to capture longs that go past this region, targeting upper bookmap liquidity? Not necessarily, especially when that bookmap liquidity is quite bare. But with all that said, I'm getting ahead of myself. Let's start from 8:30. So I mean, right at 8:36, we see price coming down, selling liquidity up here at 695 7.5 region. I have this lower liquidity, clear liquidity target here at 6940. Let's see if there's any crazy news today. I don't believe there was any news at 8:30, so it should have been pretty clear. Yep, we had no news until 9. So I mean, at this point, it does look like shorts are gonna come through and take out that 6940 region. So let's see if there's anything to be taken there. 8:30. Yeah, and I mean, right at market open, we saw big buyers getting trapped up there. But now we're in this region, so potentially a good trade idea would be seeing how we react to this barrier or perhaps even this barrier right here. Looks like we break this barrier simply looking at the footprint in hindsight, and we fail to break out of that barrier, and as we're coming down, the sells follow. But what I'm looking for in specific is that is if there's any retracement opportunity for us to enter into good value shorts. So let's see if there's anything like that. So we go and take out the upper liquidity and we start falling down aggressively once again, and what we see is that liquidity is actually following us towards the downside. So now if there's a retracement and we do see absorption around that region, potentially a viable entry there. And I mean, we're seeing that downwards move, pretty solid liquidity at that region. If we see absorption at this region or sellers reject this region, then those shorts may be very viable until that 6940 region, and we see buyer absorption there as well. So I'm just looking to see. And I mean, sellers are continuing to show urgency as they're moving their orders. Hold on. Let me see what's happening here. They moved it up. I mean, I'm still waiting here because that 130 region is above now. I really want to pull the trigger on the shorts here. Oh, would you look at that? How low do we get? Do we get to 40? I mean, yeah, we get exactly to that 6940 region. Look at that. Shows the power of bookmap liquidity. But honestly, I don't. What would have been great is to see buyers. Let's see, 6952 at this 40 candle, 6952. Nothing crazy there. Icebergs are not providing any. CVD is negative. I'm seeing a lot of buying. See, what I would have liked to do is wait for us to come up to this region or anywhere close and see buyers absorb. But since there's a 5-minute candle and we can't go down to the 1 minute on footprint, simply due to data issues or data plan issues that we have. Um, it wouldn't we don't know if there was absorption yet or not simply because we weren't there to see it. And on the 5 minute, a lot of it gets moved out simply by normal market mechanics, right? But on the 1 minute, if there was some sort of absorption there that we were seeing, as it is by VWAP as well, right? Yeah, it is by VWAP, and that would be this candle, this big sell drop candle. If there's any type of buying absorption that we're seeing around like these realms, right? I might be tempted to pull the trigger here. But again, asymmetric risk is not really there. So I'm gonna pull out two scenarios, right? So 52.5, 52.5, hold on. So 52.5 is gonna be all the way up here. So that would be a really great entry. And our stop would be at, I would say 57, 56.5, right? Because it looks like it's around that what's between. That would be that's $1, $2.50, $1.25. So it'd be at 66.25. So we might keep it at 66.75 just to hold those two ticks of risk tolerance, right? Okay. And our take profit would of course be not at this 40 level, but it would be two ticks above. And what we see, oh yeah, this was liquidity at mark, but essentially there was bookmap liquidity at 40, like such. And what we see is that a 1 to 3 risk to reward almost would have gotten hit if on the footprint we saw any sort of buyer absorption occurring around this region and seeing that clear rejection off of VWAP, where dark pool orders are made. Now, worst case scenario, we see some sort of entry around here where we see the selling aggression start to continue. Right, so let's just say 6950, which is a pretty late entry. Uh, 6950. And again, it would be at 6.75. That's 27 take stop loss. And our target would be 40.5. So I mean, it's a 1.5 risk reward. Would have worked as well, seeing as you get down. This 6945 region is showing some harm, but the sellers, I mean, it's a really quick flush of that selling. And it would have worked out like that very nicely for us, like such. And that seems to be the bottom of the day on ES. Yep. So I mean, there's two scenarios for that same trade, right? Us and the difference between them is 10 ticks each. So from a 1.41 risk reward to a 2.82. So you see how entries can make that big of a difference, and that's why reacting on absorption that we're seeing is honestly very discretionarily based, but although discretionary, it is based on quite objective data that we're seeing here from the order flow. But with that said, let's see what happens after, see if there's any trades that we can make there. So I mean, we see pretty aggressive buying pressure result from this, and potentially that may be a result of attempting to come to this high volume node at this yellow level that we're seeing. And not seeing anything really to take there simply because I mean, 6940 still seems to be the most evident target. I mean, 6956.25 may be no, may also be a target, but I mean, it's hard to tell where we're gonna go next looking at order flow. I mean, at this point, right at 854, you see crazy buyer aggression here, which may indicate that if we have seller absorption there, that we may start to flush towards the upside. But that being said, let's see what happens. But then if you look at this point, we see a lot of trapped buyers here because buyers struggle to get above. And then we flush down once again. Push down. Now here there may be some idea for shorts, but I mean it would not have worked. And that's signalized clearly as we break through that liquidity. Now, I would have never expected that we're gonna flush this strongly on ES. Maybe a result of that 9 a.m. news, which I'm gonna take a look at now. 9 a.m. news is nothing crazy. Okay, let's take a look here. Yeah, I mean, after we see that big flush towards the upside, we start chopping here. And spread between liquidity is not asymmetric for us to make, or us to have any real edge. Like, here, yeah, that's not tradable for us. This type of thing. Mm. Push towards the downside here at 10:30. When do I take my trade? Take it at now. Aha. Yes, I mean, we see these shorts come in, break past lower liquidity, and then we buy back up really quickly. Now, it looks like we have a clear target here at 6970. So, I enter based off of this 6960 liquidity. Do I? Nah, hold on. We had lower, I'm pretty sure. Yeah, we had lower after that. And, I mean, where do I enter longs? I honestly don't see an area to enter longs here. The 940 candle. So that would be in this candle right here. Hmm. Potentially maybe off of this retracement, expecting price to go up. I mean, if that was the case, we should find an entry here nonetheless, because that's the same region where we've been seeing buyers get absorbed and aggressive selling start to come in. Because I mean, right when we've tapped there again, we've seen the exact same thing happen. And now that these aggressive sellers are pushing in, it's not looking good. So, I mean, in my eyes, this would be an area to move, stop, break even. If we've done that, we would have avoided that loss. Now, we see those sellers flush back in as such. And then we see those big buyers flush back in. And I don't see any opportunity within any of that. Because I was actually active during that time. Now, soon after this point, we see the selling pop in. So 5 and right at 10. Because I mean, like, this may have been a tradable opportunity We saw lots of trap buyers at the highs and then quick flush towards the downside at the same region that we've been doing. Now the target, that's a bit more difficult to comprehend, but simply because the liquidity that's there on Bookmap isn't as rare as we're getting later into that morning session. And we see that flush towards the sell side occur. Now we make a retracement in that sell, and that's where we, aha, yeah, we saw these trap buyers, saw a flush down, absorption of buyers, and then we entered here, assuming that price is going to head lower again, hopefully to that 6950 region, right? Yeah. As I've marked here, there's trap buyers at the high. We kept projecting this area. We broke lower liquidity. And this is the lower liquidity I was talking about. And at that point, our high volume node was actually positioned down here as well. So we wanted price to head lower into that high volume node down here where price is honestly attracted. So it's kind of a mean reversion play as well. And I mean, on the way down at these moments, we have been absorbing buyers, which is good. But as you can see, if we moved our stop to 2 ticks in profit, we'd have gotten cooked as we would have got stopped out on the second candle. And I'm pretty sure this supported us, right? Because it's showing seller urgency. Now, the only thing I have against this trade is simply the fact that our target that we were targeting is not really a target if you look at it, right? I mean, everything's around 80 to 90, right? So let's just balance it out and say 80. Now, what's 1.5 times 80? Just as a quick benchmark, right? I mean, that's going to be 120. Now, 120 is going to be our bare minimum for any significant liquidity. Our target should likely be even higher than this, and I mean, we're sitting exactly at 120. And the liquidity that's surrounding us is much higher. So as a result, is it really worth taking to a target that's less liquidity than our actual barrier? Not really. That being said, we have rejected from this region before, as shown here, that 6950 relative region. So, I mean, it's okay to hold, ensuring that our stop is around that 6960 region, of course. Which, I mean, ours was not 2 ticks above this region at 6960.5 because then we would have got cooked. So we just moved it break even just to allow a little bit more wiggle room, which did happen to work out to an extent there. But I mean, sellers were not showing aggression. I mean, buyers got absorbed here, sellers came in, but they're not pushing through aggressively. The break even might be taken there, but honestly, the only thing that I think would have resulted in us either taking profit early or simply exiting is simply the fact that this target isn't that great as well. But soon after, what we saw was that very big significant liquidity is at the 6962.5 region approximately, and we see that we're seeing buyer absorption up at that region. And we also see lots of sell icebergs. Now we see price start to fall. And we have that absorption. Now it's very late within our session. We're usually done with the session at usually 10 minutes before this. Since we woke up late, we stayed on a bit later as well. And I mean, we fell from that region. We flushed down. Where's that flush? Happened at 35. So I mean, we hover around this region for a bit, see that seller absorption, and then we finally flush down to that 6950. So this region was a very big resistance area for price that drove price lower. buyers were unable to push above, as shown by this objective absorption that we're seeing. And through this volume delta that we're seeing here, lots of buyers above, unable to balance out, essentially absorbed, and prices going lower. So, I mean, there's that. I mean, these last two trades worked out, but all things said, I mean, there wasn't any crazy solid trades that could have been taken today. I mean, unless we saw any clear identification, like, unless we saw something like this with some good stuff, or place discretion under that, then maybe. But today, it was again, we're getting back into things. We're up today, but I'm not the most happy about it. So there's that. I do think that we're getting more into this analytical side of things, looking more at divergences and those types of things for additional analysis. And I mean, we should definitely be taking advantage of the footprint and previous price reaction alongside volume instead of bookmap targets with how the market's looking right now, simply because these targets are not as significant as it once used to be. So, with that being said, that's all I have here for today. Have any questions? Leave a comment down below or join the completely free Discord server, which is linked in the description down below. Additionally, if you want to check out the order flow tools that I use on a day-to-day basis, those will be linked in the description down below as well. Addis, which is one of our channel partners, they have a lot of free functionality, so definitely recommend you guys to check it out. You could probably get order flow, test if order flow can be properly integrated with your strategy for free using historical data even today. That being said, always do your own research before making any purchases. And yeah, that's all I got here for you guys today. And yeah, I'll see you guys tomorrow for the next episode. Goodbye.